Welcome back to the show. I am Dan Edwards, and you are watching / listening to Seattle's Eastside Real Estate Team podcast. Our next guest, Admiral Flunder. Admiral is a licensed loan officer / retirement mortgage officer for Fairway Independent Mortgage Corporation. Admiral is a Western Washington University grad. What's their mascot, Admiral? Do you remember? Go Slugs or something like that, isn't it?
Vikings.
Oh, Vikings, sorry. And has, with the help of his wife, Toya, maintained a successful marriage of over 40 years, 3 grown children, 8 grandkids, and a partridge in a pear tree. Admiral is an active member of his church and member of Rotary. It's his job to provide the best education available with the most up-to-date facts so you can make a bright and educated decision that helps you feel much more secure about making a decision with one of your most valuable assets, your home. In the early 1960s, when reverse mortgages were first introduced, there were no government programs backing them, and it wasn't until 1983 when the Senate approved the proposal of having the FHA insure these mortgages. The FHA has been guaranteeing reverse mortgages ever since it was passed. Thanks for joining us today, Admiral. It's good to see you.
It's good to be here.
Well, so our topic today is if what you thought you knew about a reverse mortgage was wrong, when would you want to know the truth? And I'm guessing it's going to be today.
Today is the day.
All right. So let's talk about these. What is the minimum age requirement to qualify for a reverse mortgage?
You have to be at least 62 years old or within 6 months of your 62nd birthday to put in an application.
So 61 and a half.
Yes, sir.
Okay, so let's dispel some myths. When you get a reverse mortgage, you're giving up on the deed to your own home and will not own it anymore.
So the fact is that the deed always stays in your name and you have all the rights that you do now. You can sell it, you can remodel it, and you can keep any equity that is left when you move, just like you would on a conventional mortgage.
Okay. Myth number 2, my house must be debt-free to qualify for a reverse mortgage.
And the facts are that you must be the homeowner and either own your home outright or have significant equity. Significant would be, in today's market, about 60% equity. And you must live in the house as your primary residence. You've got to live there 6+ months per year. And there are some income and credit qualifications that you apply to ensure that you have the ability to pay your taxes and your insurance to maintain the house. But other than that, the payments are voluntary.
Voluntary. Okay. Myth number 3, I could lose my home and be forced to move.
So the fact is, as long as all the loan terms are met, just like on a conventional mortgage, you cannot be forced to sell the home and or move. The terms include living in the house as your primary residence, maintaining the house, and paying home expenses such as taxes and insurance, just like a conventional mortgage.
All right. Myth number 4, your home will be taken away when you pass away and the family loses the right to the property.
The facts are, when you permanently move out of the home, whether you sell it or pass away, neither you, your estate, nor your heirs are responsible to pay the deficit if the balance owed on your reverse mortgage exceeds the home value. However, should your heirs want to keep your home, they can purchase it for 95% of the current appraised value.
All right. So myth number 5, reverse mortgage loans don't offer anything different from other loans, but cost way more than other loans.
So one thing is important to understand, that there have been changes in the FHA's reverse mortgage program in recent years that have reversed borrowers' costs. So while any reverse mortgage is still more expensive than a traditional mortgage, they provide more options than a traditional mortgage. For example, you can stay in the house until you're 150 years old. You don't get that kind of guarantee on a conventional mortgage. So then it's going to provide you more options than a traditional mortgage, such as no mortgage payments. And of course, we always have to say that the borrower is still responsible for paying taxes and insurance and maintaining the home. And there's also an increasing line of credit that grows on the unused funds. And what I mean by growth, it means it adds value. So if you had, say, $100,000 line of credit, it increases in value, making more equity, more proceeds available to you over time.
So it sounds very complicated, and I know I'm going off script here a little bit, but in the long run, what you're saying is there's actually potentially more benefits than a traditional loan.
Absolutely. When President Reagan introduced this, it was us 62 and older individuals. We are the largest demographic, and it was very important that we would have an opportunity to have to grow with dignity, that we would have, options. The truth of the matter is, Dan, I thought it was too good to be true, because it just did not seem right that I could, and my wife and I, we have a reverse mortgage on our home, that we could live in this beautiful home and not have a required payment, yet and we haven't given up our equity, our title, none of those things. It's complicated because it's unique in terms of how it's administered, but fundamentally, this is the same as my other mortgage, except I have a voluntary payment.
Yeah, and I think from a standpoint of quality of life, and I've had this conversation with many of our seniors out there, is there's an apprehension because there's a level of security owning a house free and clear, and having that nest egg, whether it be $500,000 or 750, and so they fear tinkering with that. And in the meantime, they live by modest means because they don't have any other ability to take the Social Security they have and really live. They're just barely, because they spent all their working lives pouring into the mortgage, and now it's locked up in a mortgage. And so I think that, from a perspective, it's really important that if you find yourself in this situation where you're house rich, right, but cash flow poor, is to have a conversation with somebody like Flunder, because Admiral, excuse me, have a conversation with somebody like Admiral, because there are thousands of people taking advantage of this program in order to provide you with the quality of life you deserve at the time when you deserve it, when you've worked hard all your life. So I just, yes, there's costs. There's always costs associated with a product that's going to provide you with something like this. But I think that you also have to put a value on your time, especially this time, right?
Absolutely.
All right. So myth number 6, my children could get stuck with a big mortgage if I end up living too long.
So the fact is that your children can never be liable for any amount over the value of the home, because the loan is guaranteed by FHA mortgage insurance fund. The fact of the matter is, this is a non-recourse loan, meaning the home owes. I don't owe. The home is responsible for the balance. And if for some reason we run into the same situation as we did 2008 and 9, and all of a sudden the value falls out of my home and I pass away and I'm $200,000 upside down, this FHA insurance makes up the difference. So my heirs, my estate is never responsible at any point in time. And in this Northwest marketplace, our homes continue to appreciate regardless of what's happening. And so the appreciation is such that we only allow a small percentage of equity to be used in the line of credit. So it's a good program.
It's a very good thing. All right. Last one, we talked about this just a second ago. Last myth is the safest thing is a house free and clear.
That is, a house free and clear does give us a certain amount of peace of mind, knowing we don't have a mortgage payment to make. But the fact of the matter is, with 65% of individuals over 60 having 70% of their wealth tied up in 4 walls, doesn't it make sense to make some of that equity available to them, to give them a better quality of life? Truth of the matter is our children, they don't want our home. When I'm 85, 90, they've got a nice home. What they want that portfolio. And so this allows me to take less out of my portfolio. That portfolio keeps on growing. Of course, my equity keeps growing, but they don't want the house. They want the portfolio.
Yeah. Well said. Is there anything else you want to add?
Well, yeah. Other things is in the event of an extended nursing home stay or a lawsuit, all of your home equity can be lost that you spent your whole life to create. Let's say if you had a conventional mortgage, a reverse mortgage can unlock that equity and allow you to properly manage it for the benefit of your family. And even we at this particular point, we are partners with the National Association of Insurance and Financial Advisors. They come to us as a partner to help them unlock the equity. So like, for example, in this particular bear market where their portfolios are going down, they do a reverse mortgage. They have that line of credit, the equity available. I don't like to use too much financial planner speak, but it mitigates the sequence of returns risk. In other words, when your portfolio is going down, you don't take money from it. You take the money from your equity, you let your portfolio get back up, and then it's shit. And then you don't have to worry about what a lot of folks are worried about. We're living longer. We're living into our 80s and 90s, not us guys so much as our wives.
I mean, you don't look a day over 48. I mean, you look great.
This facelift cost a lot of money.
That's awesome. Well, hey, Admiral, I so appreciate you coming and demystifying this process. How do folks get a hold of you?
Okay, so you can see my number there below, 206-890-9961. Critical to understand, I'm an educator. I am only presenting information. I'm never going to ask anyone to sign on the dotted line. Just want to mitigate individuals like Dave Ramsey's out there selling a one-size-fits-all program. He has great concepts with regard to debt, but what works for my group, works for me, doesn't necessarily work for my friends. So I'm out here to just make the truth the truth. Thank you.
Good. Very good. Admiral, thanks so much for coming on. We appreciate it. Look forward to the next visit. Up next, we have Deanna Reagan with Refresh Printing and Promotions right after this short commercial break.